The spotlight of today is on a company that went public on NEO quite recently, the beginning of this month, Glasshouse Brands, and I've got the pleasure to be able to welcome Kyle Kazan, Chairman and CEO of Glasshouse Brands. Kyle, welcome to NEO Spotlight.
Thank you, Jos. Great to be here.
Kyle, let's start in what I would probably call a little bit of a high level way, like we have to think about an audience here with people who know your organization and people and potential investors who don't know your organization. So I think what would be interesting is to maybe start with a bit of an overview of Glasshouse Brands. Could you tell us a bit more about the company, where you are, what you do, you're pretty much of a leading player, leading brand in California, but there's much more to be said, I'm sure. Maybe let you start with that.
Yeah. Thank you for that. So we are one of the few vertically integrated companies, truly vertically integrated companies here in California, the largest cannabis market on the planet. And when we went public, the entire goal was to expand our operations. One, by borrowing or by purchasing, what we believe is the second largest greenhouse facility in the United States at, almost 5.5 million square feet. And also our deal with Element 7 to add a lot of retail. And so those are the two pressure points that I see: getting a low cost, consistent supply chain and having basically the best facility that frankly I've ever seen or read about in the perfect climate, and then also having those store shelves. So while we have some brands now, we expect that will continue, and that middle piece will be, we'll have everything we need to build that out. So, and everything we're heading to continuing on that plan.
Yep. And when do you think, it's one of the questions that came in, when do you think that the new greenhouse is going to be in production?
Yes, so we're still lined up to purchase it. We had experienced some delays. We are circling up on when the actual close date. We don't have an announcement on that yet, but in California, there's a lot that goes on with the government. So we're working. I would tell you that we're still shooting for by the end of the year to really get rolling there. I'm not sure we'll have our first harvest, but some months after that.
Closing in.
Yeah.
And there's always a couple of hurdles we have to overcome. One of the questions I wanted to zoom in on in your current, let's call it business plan activities, is that you made some pretty strong statements in the press recently about you are focusing 100% on California, and then you're looking at that as being your hub to distribute your product outside of the state of California. What is your views on that? Why that strategy versus the other MSOs as we see them developing in the market? So why that strategy? And two, what are your thoughts? And then this is a tough one, but I'll ask you anyways. What are your thoughts on how the regulatory environment is going to develop to enable the strategy that you have over there?
Yeah. So first thing I want to tell everybody is nothing in our numbers have us selling outside the state of California. I believe it's inevitable. I don't know of any other product that you're forced to be vertically integrated, meaning you're going to have to grow it, make it, everything in 50 different states. So eventually, to me, that's not an if, it's just a when. And when it comes to multi-state operators, I saw Boris said, within the last 60, 90 days, Boris Jordan over at Curaleaf, that he doesn't think there will be any cultivation east of the Mississippi in the future. Future is relatively loosely defined. And let me tell you, some of the reasoning behind that, not just the kind of the inevitability. And I have to tell you, from my private equity days, we started buying back in '04 penthouse properties in a place called Shenzhen in Shanghai. And people said to me, there is no resale market. And I said, there will be. Like, how do you know that? Because people are going to need to sell properties. So we literally bought when there had not been an established resale market. And guess what? We actually sold it as a portfolio, but by then the resale market had gone and had actually pushed properties. When you look at cultivation, not every state cultivates strawberries, and it's just not economical because of weather. The Dutch have made things very interesting with that because they don't have great weather, as you know, Joost. But when you look at Massachusetts, and it's been reported at least a couple of times, people can Google this. It's been reported that 10% of the power grid of Massachusetts goes to cannabis. Okay, that's not sustainable. People there are going to go, whoa, 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 wait a minute. And so what I like about what we're doing out here in California is we are in the most competitive environment. It is the Wild West out here. We've got this massive illicit market. So you better be dialed in. And so our growing costs are so much lower than almost any state. Someone may argue Oregon or, Washington or, a spot here or there, but by and large, there's a reason why California and marijuana are synonymous. And so, when we look at this, where, tomatoes are very, very hard to make sense out of growing at scale when you're competing with Mexico. And because there is no appellation for tomatoes. And this farm was basically one of the last standing, and it's still growing tomatoes. It's actually still doing it as we speak today. So I'm really excited because, there is going to be massive commoditization in California. We know it, it's coming, and you better have things dialed in. When the fence is open, when? Now, you brought up legislative challenges. Nevada is going to want to figure out, Phoenix or Arizona is going to want to figure out, well, if we lose our cultivation and we have tax there, how are we going to tax the product coming in? And I think ultimately they're going to look at alcohol, they're going to look at other CPG products, and that'll get figured out. Just like the resale market in Shanghai. I didn't know how it was going to happen, but people are going to need to trade. And that will happen, and taxes will need to be paid in local jurisdictions like everything else. So I'm excited for that. But I want to make sure we're crystal clear. Our numbers, we don't know the when, so it'd be a bit reckless for us to just program in a when. So we've left that out there going, that's a free call option if somebody buys our stock.
Yeah. So I would like to zoom in a little bit on the point, and I see a question here that's kind of related to it. Zoom in on the point of, commoditization of the market, the importance of being able to produce high yields at very low costs. What is also going to be very important in achieving that, of course, is to making sure that your administrative costs, your other operating expenses are very tightly managed. Also, what are your views? What are your thoughts on that? What is your approach? To do that. So there's the environment that you talked about, but how are you going to make sure that happens also within the organization?
Yeah. So the when it comes to the environment, there are certain things we can control, and certain things we cannot. We've chosen areas that really do well in the light spectrometer and do well in ag. Like we picked Santa Barbara County because of the light and because some of the similar vegetables that ag professors had told me, if they grow well here, cannabis should do well here as well. And so part of that also is learning after 5-6 years of being out here and being on the cultivation side. And so, we feel like there really is no better location than this farm we're buying. I mean, everything checks out. Now we've chosen it when it comes to the weather every day. If history is a guide, we have so much light there. It's even better than Santa Barbara, where we've thrived. In regards to the controllables, where I can't control the weather, we can certainly control our expense. Scale operations really help in knocking down costs. We've learned a whole lot about dry cure, some of the post-processing, things like that we're going to be employing at our newest farm. So everything that we've learned over 6 years on 500,000 square feet, we are going to be employing into this. And the best part is the option to buy is Casey Howling. He's the one who built this. And so he is becoming, we bought his option with him coming aboard. So he has, call it schmuck insurance for the investor or for me as a CEO. This man knows how to grow at scale. We know how to grow cannabis, dry cure cannabis, and we're merging those together. There are always going to be bumps in the road, but we're confident that we'll work through. So, we watch our costs closely. This ag is a penny's game. Right now with cannabis, people think, oh, there's huge margins. Those margins are going to disappear. It's going to be a long time before it turns into pennies, but commoditization is absolutely coming. So we watch that closely.
Yeah, I like the way you put things in a very straight way. That's the reality, and that is what you need to be prepared for, and that is what you are, which I think is very important. Another question, still sticking a bit to some discussion around the current business. Another question that came in 2020. You grew your flagship brand from 0 to the second largest one in California. How do you do that? How did you manage to do that? What is your secret sauce?
It really helps. Having 4 dispensaries, those are like labs, and we have one in Northern California, one in LA, Orange County. So different groups of folk, and so we understood the retail side, we understood the pricing, and so what we were able to do is we assessed our quality. We thought it was, kind of high medium is where we put ourselves, kind of the Casamigos, if you will, of cannabis for, tequila fans like me. And so we just looked at it as, let's price it right so it's a good value. Let's not try and pull every last penny off the table. And then the other thing is, what's hard for a lot of brands that are not vertically integrated, and almost every single group out there is not, is getting the consistency, not only the quality consistency, but also getting it on time, pricing consistency of the wholesale market, which fluctuates greatly. And so we were able to basically, since we grow it ourselves, we understood how much was coming out so that we could promise all the different retailers out there that we would stay on their shelves. So there were a lot of things there, but I would tell you that the price value to the consumer was the secret sauce on that. And we've been flirting around with it for a few years. And then when we decided, okay, it's time to put our foot on the gas in 2020, I think we went from number 65 to number 2. And depending on who you use for your data, we're somewhere between number 1 and number 5 right now. So call ourselves a top 5 brand. We're in that category, and we're looking to expand more categories.
Impressive, and definitely something that gives a view on what is possible and what is to come. I see a couple of questions coming in on specs, on the spec. I see some questions coming in on financials. I will come back to those later on, of course. All of that, knowing that we cannot here discuss any material items, of course, that need to be made public in a different way. But Kyle, before we get into that, how do you look at the high level at your strategy going forward? Like, what are the big steps? There's the ones that we know, that we are aware of, that you are doing, but how do you see your strategy over the next foreseeable future? And by foreseeable future, people always say, what are you going to do in 5 to 10 years? I wish I knew. So when I talk about the foreseeable future, I'm more thinking about, what are the big plans for the coming 3 years?
Yes, so I appreciate that. And I see some of the questions, and some of those are I get them tweeted to me, and a lot of my long-term investors and my wife ask me some of those same questions. So what I would tell you is, all the experience we've had to grow at what we thought was scale, we are going to be ramping. It's not this is not an arb play, although the stock is under pressure. Everything that I've ever done, and I've been investing in real estate since 1991 and been doing private equity deals since 96. There's not one deal that I've ever gone into saying, I have to flip this deal. Long-term value is what I've always focused in on, and that has not changed here. We are buying Mount Everest. We've got to monetize Mount Everest. It will not happen on day one. It's going to take some time. And you don't want to overdo it or go too fast, but you don't want to go too slow. And so it's almost like, what porridge is too hot? But if you go too fast, you're going to just cannibalize yourself. If you go too slowly, then you're not hitting your economies of scale. So that's something that the team we're working on right now. And so in regards to, and I see a number of the questions there, and again, solid questions. And I understand our stock is under pressure because of the uncertainty out there. We made an announcement during the SPAC process where Topco is going to put in a large investment, and we were going to do a 10-year deal of retail and mainly cultivation. And while we had a signed LOI, the deal was far from over. And so in retrospect, I would tell you, I wish we had not put that out. That's not the kind of thing I would tell investors ever. I don't tell people about handshake deals. I tell them about deals that are done. And so when it comes down to this, and I came into the SPAC as the largest investor, I took no money off the table. I would tell you that I am confident that we will continue to go to plan and that we will have news that is coming that will answer some of those questions. But I don't want, things in cannabis are a little bit bumpy. We'll get there, but if, thank goodness on my private equity real estate time where I didn't have a ticker and I have it right up there. So I'm mindful of what's going on with our stock, and I'm mindful of the pain that our long-term and our PIPE investors are feeling. But I also know that, the last deal I syndicated some years ago was a very large project in Newport Beach. If I'd had to watch a ticker and not focus in on the plan when there was a bill to do rent control, then the state did pass it. Then we had COVID. Then we had it would have been very difficult when it was like, this is how I would say, and everything went to plan at the end of the day. The line got there. And I would tell you that when it comes to this business, I'm very comfortable with all the assets we have and the brands that we have and the deals that we have in place. Things are good. I keep being told by counsel, not good to, and by the way, like I said, not my DNA. I'd rather say deals done, deals done. Once we start getting into that cadence, I think the market will take care of itself. And I will tell you, I don't love seeing that, but I also think I got a very good buy on my house. And I don't check on a daily basis what it's worth because I believe in the long-term value of my house.
Yep.
I hope that doesn't upset a lot of the folks listening, but that's the best way that I could explain my thinking here. And I'm hoping that we have long-term investors that will get used to kind of my cadence, but also we're planning on having investor tours. If you can show you have a stock, as we really push off on the farm and some of the other things, we believe in transparency. And every one of our private equity investors, whenever they were going through Santa Barbara, whenever they were near a store, we always said, go in. We will make sure you get a tour. We want people to see what we're doing. This is not brain surgery.
Yep. No, Kyle. And, having done quite a few initiatives in my life also as an entrepreneur, I can only but agree with you. What is critical is your vision and the long-term value of what you're doing, and then executing upon the plan. And there will always be bumps, and I think that that is the reality of any business, and particularly a business like the cannabis business, and in the environment in which we are today. So that takes me a little bit to the questions. You said yes, the stock is under pressure. I'm now an investor sitting over here, where you know a little bit how I think, so that's probably already giving you an answer. But what is your message to investors, not only the existing ones, but also new investors who are looking at this security now? Like, is this the right moment to step in, or would you say no? Maybe it's too early. You should wait a little bit. What is your view on that? What is your message on all those investors that see this company and look at the stock price and hear the story?
So let me give you kind of an analogy, and again, real estate was my, that's where I really cut my teeth on the investment side, since you're asking me an investment question. So some of the properties I bought in the 1990s, foreclosure, things like that, I would get hung up about $500, $250 a door in my negotiations. Those have been, I knew the value was there, but I watched my pennies tightly. And I still have that when I negotiate, because I do believe you get your value on the buy. But when you look back over a period of time, if you think you're getting a good value, the one thing I learned is the value was there, that it didn't matter, that 250, the 500, I could have just scooped it up. There was a brilliant macro play. Now, is $5.90 a good value for the company? In my opinion, and again, I'm new to the public markets in this, I would say if you're looking at this as a long-term hold and not trying to sell it next week, because I can't tell you, will there be a bump in the road that I'm going to announce next week or 3 weeks or 10 weeks? There probably will be. But long-term, I would tell you that having the best and the largest supply chain in the largest market makes very, very good sense. Having the most retail shelves, or at least let's call it a top 5 retailer, absolutely. That's going to be a problem for brands. They're going to be battling. And then when it comes to us creating brands, having those two things gives us a unique advantage, even just, basically in pricing. So we have all the tools. There is some questions that are good ones. They will be answered. Unfortunately, I can't answer them today. I'm not doing premature announcements to try and please the market. I know that sounds arrogant or, frustrating, but it has done me well in the past to wait until we have things that are actually completed, and that's the best I can tell you. And these are huge transactions we're talking about. So, I believe in the company. I'm happy that I have not sold anything, and some of my valuations are higher than the current stock, and I'm still happy. So I believe in what we're doing, and we're pioneers right now because this is a brand new industry. So, yep. I guess I hope that answers that. I think we're a good value at where we came out. If someone had asked me, should I buy then? I would have said, I think we're a good long-term play.
Well, I'll give you a thought on this, and I'm speaking, of course, here on my personal behalf and on behalf of the exchange or the organization I represent. But I would say at the end of the day, what you look at is what is a plan, what is a vision, and what are the ingredients that are there. And when you then see a stock being under pressure, that's, I guess, my Dutch roots that come up, that is when there is opportunities. And I think to your point, the ingredients are there, the plan is there, the vision is there. You'll come with announcements that I'm sure will confirm some of the developments going forward. And I would tend to say, this is a great period, in fact, for investors probably to look at it and consider this stock. I've seen it with other companies over the last several years, where you see tremendous pressure, and that's when you step in. Of course, you need to do your homework, and you need to feel comfortable, and you need to understand the risk. It always has to be an informed decision, but that is what people have to look at. That is the ingredients. I was going to ask you a question, but I think you already answered it. What makes you unique? And I think you covered quite a few of those points. What makes you a unique opportunity in comparison with other ones? A question. Yeah, go ahead, Kyle.
Just really quick on that. Every day I get up and I work out to CNBC or Fox Biz, Bloomberg. I like to see, and the stocks are at 35,000. I think this morning Dow hit a new high when I was working out. And I will tell you, I have not been equity investments. When I hear there's a value, I just put my money and I sort of just leave it alone, and I don't look on a daily basis. That's me. I know there's a lot of people out here that's not how they handle. And, Graham Farrar, one of my partners, he's got it on his phone. But I would tell you, this reminds me a bit of the internet days. And I'm going to tell you why. We're in prohibition right now. We're federally illegal. Everything is really hard right now. When it came to Amazon and some of the ones that won, and there were many more that didn't win. There were some great values, and people would have made absolute fortunes. And a lot of times they were like, Jeff Bezos, what the hell are you doing? Well, he had to worry about bandwidth for people that want to buy. He had to worry about all kinds of things that were beyond his control. And some of that we deal with too. There will be some big winners here. I would not anoint anybody as that is the company. There are some great ones out there, and I have a lot of respect for them. And the future will tell. But I would tell you, investing in cannabis right now, vis-a-vis the rest of the market on a macro level, seems like a no-brainer. So, and when I say we're like pioneers, this is not a mature industry. When we have problems, a lot of times we have to figure them out because there is no real data on some of the things we've had to deal with. So I would tell you, I think cannabis companies, there's many out there that I'm comfortable will survive and thrive in the future, and we'll see which ones turn out to be the Amazon.coms.
Yeah, and again, and I think that long-term investors, that is the way that you need to look at those things. If you want to be a day trader, maybe you want to go into some other asset classes that allow you to play that. But if you're a long-term investor and you look for value, I agree with you. I think it's an industry with tremendous potential. And then if you look at specific companies, you have to look at those ingredients. What makes them unique, what makes them different. And I see things in what you say around acknowledging the commoditization of the market, being extremely focused to cost, the success that you've had with your brands, and what you can do in short time frames. I think that is what I would look at, and that is what would drive my decisions in this matter. A couple of questions that I would maybe like to come to, and we're slowly running over time, but we'll take a few more minutes. Where's the Element 7 deal? That's a question that just came up.
Yeah, so we have a deal to purchase 17 stores from them. Still going. We cut that deal a long time ago, and then they're consulting with us to bring in another 40 or so, and that's still, everything's fine. I'm working closely with Josh and Bobby on that.
Moving forward.
Absolutely. Yep.
And then
we're working together on helping them on even assisting them on even some of their own stores, just because we have a very cozy relationship.
Then another question, I said I would briefly come back to that came up. How was the entire SPAC experience for you?
Boy, I would tell you there were certainly ups and downs with that. I would tell you that SPACs in and of themselves came under pressure quite a bit while we were in that transaction. that wasn't fun. We had to answer a lot of questions about structure, things like that. I think for what we were looking to do, the SPAC transaction worked just fine. So I was happy. I was happy with it. I learned a lot before we entered into it. I think SPACs are likely here to stay, but they're going to be morphing into some structural differences. I won't get too wonky on that. The hard part, we're used to hosting people up at our farms. We're used to the PIPE process and the investor process. It was like this, and let's walk around. Let's get our shoes dirty a bit, and let's talk turkey. That's the way we've always done things. That's the way we were able to raise money from private investors. This, it went fine. It would have been better had we been able to, get people out to California. And I think that would have been even more positive, because I think people would understand the situation with us and our company much better. And, right now we're dealing with, a lot of folks that they know us, but they don't know us.
Mm-hmm. Yeah. But I guess that's a bit the nature of capital markets, and I think at the end of the day, the vehicle is I believe a very interesting vehicle. It's definitely gonna know its evolutions. Yep. We came out ourselves with a new type of SPAC, and you always have to look at that, but it's putting you in a position where it's enabling you to do and execute upon the very ambitious vision. And I think you've also had the opportunity to do it here with an organization that I have a lot of respect for. I'm thinking about John Settleman and his team. Real people who understand the industry and who have a very deep knowledge and have a great track record. So I think you find yourself a very good partner over there. And again, my point is it's about enabling the organization and take it to the next level. So I think that is extremely exciting.
100%. And for the right transaction, I think the SPAC is the best way to go. So I didn't mean to sound like, the market is the market. There's some things you can control, some things you can't. So, when you're reading in the Wall Street Journal and things like that, where SPACs are under pressure as far as that was the timing that we'd had. So, but I would tell you, I thought it was the right structure for us. We could have done an IPO, and we chose to do the SPAC.
Yeah. I see lots of other questions that came in. So I think, Cal, the one thing that I can tell you is that you definitely have the attention. There's a good crowd participating today. You definitely have the attention of the investors, and we are 5 minutes over now, and I think it's always important to keep this, to a kind of 30 minutes of time, because Zoom is not always the optimal tool. It's not like, to your earlier point, being able to sit together and have a good chat with someone. But to all those who put in questions, we will make sure that Kyle has those, and that he can get back with his team and answer your specific questions.
If I could just add one, there's one question on there that I think can summarize a lot of them. And you're right, we're past the 30, we're 10:36 my time. They're asking about the quarterly results and will we be conducting a conference call? Look, we've been radically transparent with our own investors privately. And so we did the perfunctory release in the first quarter, second quarter going forward. And right now we haven't settled on a date officially, but it's likely August 16th or 17th. We're just locking that in. We're looking at whenever everyone else is reporting, and absolutely, we'll answer questions. We will do a conference call. And so and we're hoping by that point, we'll have some of the other questions here they're asking, some of the announcements that we'll have. And so, right now, I don't think we have any credibility in the market. I'd like that better than bad credibility. And we need to build credibility by getting results and by executing. And so, we're looking forward to going forward and where we miss something, we'll own it. Where we're doing something great, we'll share it for the market. And so at least you'll always see what you get. And as long as we are doing this, preferably this, but I would say most of my career, I get used to this.
Oh, Cal, I would not. I would not look at it in any other way. I think that is the way that it goes. That's the reality, and that is how all great companies have been built. It's rarely that you see a rocket evolution of a share price of a company. I think it has to be steady, and that's also what's making it at the end of the day reliable, and to your point, credible. But the one thing that I would like maybe to come back to it, I was going to ask you when that was going to be, but you confirmed it somewhere around the 17th, 18th of August. That's when you're going to come
16th,
with
17th, because I think 18th is too late. So one of those.
Okay. So people have a bit of a view on when much more information is going to come out, and then I think keep an eye on the announcements. I'm sure that things are going to come out. And the very last thought that I would like to make, you use the word no credibility yet. I think the one thing that everyone has to keep an eye on is what are the assets that you have today. What have you done today? And I think that is the foundation of everything else that you are doing, and that is what I would look at, particularly when a stock is under pressure. That is for me the core element in investment decisions. Cal, thank you very much for your time. Thank you very much for your candor in this discussion. I think that is what everyone loves to see and everyone loves to hear. And wishing you great success in the way forward, and looking forward to see those announcements coming out in the weeks and months to come. Thank you very much, and I'm sure we'll talk soon again.